Welcome to my take on the market. Okay. You know, we've had red flags, and we still have red flags all over the place, that this market is not going to survive. Okay. I mean, one of the flags, most important, these financial shows, TV shows, are not bringing it to your attention. It's ridiculous. So, for example, okay, housing starts is a big red flag, and they're crumbling. They're falling off the cliff. Durable goods, that's where we have big orders for appliances and machinery, and it's orders they place well out in the future, falling off the cliff. We have the yield curve flattening. I mean, that is so important. In 40 years, it's never been wrong. When the 30-year and the 3-month, those yields aren't 3% apart, which right now they're not. They're about even less than 0.5%. They got to be 3% apart. When they're not 3% apart, 40% of the times it's been right. It tells you that we're in a recession. We are in a recession, okay, or it's starting, and always follow through, of course, with a crash. But here's the most important one. Take a look at this market. When this market dropped in October, it went down 30%. I mean 20%. That was the biggest drop we've had in 38 years. Followed by a back-to-back rally, the biggest rally we've ever had in 78 years. So when you have a back-to-back, the biggest drop in 38 years and the biggest drop in 78 years, that tells you the economy is imploding from within. And they don't want to talk about that. They don't want to talk about the yield curve. They don't want to talk about any of the red flags. Instead, what they talk about? The trade deal. The trade deal is wonderful, and they keep on trying to push the market up with the trade deal. What is really interesting, they're having a heck of a time getting through this resistance area right here, 280. It's failed 3 times, and now they're having a problem because the bank stocks aren't leading. And when you don't have the bank stocks leading, your market tells you it's really weak. So we have a lot of opportunity coming our way for shorting. So in the meantime, this is called a momentum market. You buy into the rumor, whatever rumor it is, and the rumor is right now the trade deal with China, and let them keep pushing the market up. They may even try to get back to this October high right before it crashed. But this is the important one. They're having trouble right here. But let's say they push it up. Just stay long with your positions and just keep your eye on, okay, as I said, when you get to this point up here, keep your eye on that. But most important, watch your volume. The volume keeps on dropping. As volume keeps getting worse and worse. And if you go look at your volume, it tells you something. Look at the volume here. If you look at the volume on the way down, look at the size of the volume on the way down. See this over here in this chart? That's the volume on the way down. Look at the volume on the way up. We got about half the volume on the way up that we had on the way down. That means there's more sellers than buyers. And what's interesting about this market is that as the market's been going up, the reason why we have this divergence where the volume's going down, you can see the white line, which is the average volume, because the big institutions have been pulling their money out. So keep your eye on the volume. Now, the last thing, gold is going to go through the roof, and gold stocks are going to go through the roof at some time. It's going to be a while, and here's when it's going to happen. They're going to announce QE4 because Trump wants to get the interest rates back to 0 again. And when they finally announce another QE called QE4, that means that they have to print money. And when they print money, it destroys the value of the dollar in your wallet, the buying power. That means the dollar drops. And when the dollar drops, gold's going to go through the roof. Join my gang, Phil's gang. Become a gang member. And I'll see you on the charts.